Get the latest Zacks research, analysis, and rankings on exchange-traded funds in Exploring ETFs. We're going to talk about Japan ETFs now with our ETF research director, Nina Mishra from Zacks.com. So the Bank of Japan sort of pulled a surprise on the markets recently.
Yeah, they surprised the global markets and they expanded their already aggressive monetary stimulus. They expanded the program to 80 trillion yen from the earlier range of 60 to 70 trillion yen. And it was also reported that the government of Japan, the finance ministry, is planning a supplementary budget to boost demand. And the massive pension fund in Japan is they have decided to double their allocation to domestic stocks. Additionally, the Japanese government is trying to encourage retail investors to buy risky assets, including stocks, ETFs, REITs, by providing some tax incentives. So all these together mount to a massive monetary and fiscal stimulus, and that should be good for stocks. These are aimed at fighting deflationary risks, and deflationary risks were real in Japan because Bank of Japan's preferred measure of inflation that has fallen to 1% recently. And with the plunge in oil prices, it also the inflationary expectations may go down further.
So the net result was Japanese stocks up, yen down.
Yes, that's what they were trying to do. So after the announcements, the stock index, the Nikkei, that surged to a 7-year high, and the Japanese yen plunged to a 7-year low against the US dollar. Now, despite these recent gains, it seems that Japanese stocks still have some upside. First of all, this decline in yen, this further decline in yen will help Japanese exporters. And Japan is an export-oriented economy. So their companies do well whenever the currency is down. So that should help Japanese stocks. And given their long-term earning potential, the Japanese stocks still look a bit undervalued. So I think they have some more way to go up.
Okay, so the Japan ETFs that you have in focus, you've got 3 different examples here. First one, unhedged versus hedged.
Yes. So I have the 3 most popular Japan ETFs on this slide. The most popular one, EWJ, is an unhedged ETF. It provides exposure to Japanese stocks without hedging the currency risk. The other 2, DXJ and DBJP, are currency hedged ETFs. So you get exposure to Japanese stocks, but these ETFs hedge out the currency exposure. So as expected, the currency hedged ETFs were the real winners in this scenario because the stock market surged and the currency plunged.
Right.
And they were up more than 9% in the last 5 days or so. The unhedged one did not do bad either. It was up more than 4%. But given the possibility of further decline in the Japanese currency, I think investors should look at the currency hedged ETFs for exposure to Japan.
Okay, and then the second example you have comes from Wisdom Tree.
Yes.
That also is hedged.
Yeah, this is the most popular hedged Japan ETF. It has more than 10.6 billion in assets, charges an expense ratio of 48 basis points. It's a Zacks Rank 2 ETF, buy ranked ETF. And popular holdings are well-known Japanese companies like Toyota, Mitsubishi, Japan Tobacco. And it has done pretty well this year, up about 9.5% year to date.
And then there's finally Deutsche X-Trackers.
Yeah, the ticker is DBJP. It's slightly cheaper than the earlier ETF that I mentioned, with an expense ratio of 45 basis points. It holds about 315 companies, and again, Toyota, Mitsubishi, and SoftBank, all well-known Japanese companies, are among its top holdings. This is also a Zacks Rank 2 buy ranked ETF. This is up about 8.7% year to date.
Okay, so just to clarify, hedged would be the way to go
Exactly.
in this particular
Yes,
game.
yeah, because we expect stocks to go up further and the yen may decline.
All right, do you own either of these?
I don't.
All right, check out other information on ETFs. There's commentary, there's educational articles, and other articles in the ETF section of Zacks.com. Get on over, link to them right off the homepage. With Nina, I'm Terry Ruffalo.